The Canadian economy, once lauded for its resilience, now faces pronounced stagnation in 2025. This year has been particularly challenging for various sectors from manufacturing to services. Growth has stalled, unemployment is rising, and inflation remains high. The once robust GDP growth has slowed significantly, causing concern among economists and policymakers alike. The job market is tightening, with more people finding it difficult to secure employment. Meanwhile, everyday Canadians are feeling the pinch as grocery prices soar and household bills become harder to manage. This slowdown, while not a crisis, casts a shadow over economic prospects. Experts warn that without strategic interventions the situation could worsen. For years, Canada enjoyed a reputation as an economic success story. The country was often cited as a model for stability and growth, attracting investments and talent from around the world. However, recent years have seen domestic and global headwinds erode this momentum. Trade tensions, fluctuating commodity prices, and geopolitical uncertainties have all played a part. The current climate contrasts sharply with the post-2008 optimism. Back then, Canada weathered the global downturn better than most, emerging relatively unscathed. The country's financial institutions remained strong and consumer confidence was high. Today, the country faces new challenges demanding nuanced understanding. Policymakers, businesses, and citizens must work together to navigate these turbulent times and restore economic stability. Several key factors have converged to create the current economic malaise in Canada. The situation is complex and multifaceted, involving both domestic and international elements that have intertwined to create a challenging economic environment. Weak consumer spending, driven by rising inflation and stagnant wages, has reduced demand for goods and services. As prices continue to rise, consumers find themselves with less disposable income, leading to a decrease in overall spending. This reduction in consumer activity has a ripple effect throughout the economy. This decline in consumer confidence impacts businesses large and small. Small businesses in particular are feeling the pinch as they struggle to stay afloat amidst dwindling customer numbers. Larger corporations are also not immune, facing reduced revenues and the need to cut costs, which often leads to layoffs and further economic strain. Business investment has also slowed due to global uncertainty and trade tensions with the United States. Companies are hesitant to invest in new projects or expand operations when the future is so uncertain. This hesitation stifles innovation and growth, further contributing to the economic downturn. The global economic slowdown, particularly in China and the Eurozone, has reduced demand for Canadian exports. As international markets contract, Canadian businesses find it harder to sell their goods abroad, leading to a surplus of unsold products and a decrease in manufacturing output. The ongoing trade dispute with the U.S. has disrupted trade flows and created uncertainty. Negotiations have been tense, and the imposition of tariffs has made it more difficult for Canadian companies to compete in the global market. Tariffs on key exports like steel and aluminum have further strained the economy. These industries are vital to Canada's economic health, and the added costs from tariffs have led to reduced production and job losses. While the trade war shows signs of easing, its impact lingers. Businesses remain cautious, and the uncertainty has left a lasting mark on economic confidence. These factors collectively dampen economic activity and growth. The interplay between domestic challenges and international pressures creates a difficult environment for recovery, requiring coordinated efforts from policymakers, businesses, and consumers to navigate these turbulent times. The slowdown in spending and external headwinds have significantly impacted Canada's GDP growth. GDP growth has slowed to around 1% in 2025, a stark contrast to previous robust rates. This anemic growth reflects broader economic challenges, leading to reduced investment and hiring. Slow GDP growth limits the government's ability to invest in crucial public services. The economic slowdown has impacted the labor market, with businesses reluctant to hire. The unemployment rate has risen, reaching levels not seen in recent years. Job losses reduce consumer spending, further dampening economic activity. Prolonged unemployment erodes skills, making re-entry into the workforce harder. Inflation remains above the Bank of Canada's 2% target, eroding purchasing power. The central bank has raised interest rates to control inflation, presenting new challenges. Higher rates make borrowing more expensive for businesses and consumers. This can further dampen economic activity and strain household budgets. The central bank must balance raising rates to curb inflation without stifling growth. Finding the right balance is crucial for navigating economic turbulence. The goal is to prevent a deeper downturn while maintaining price stability. Slow growth, rising rates, and increased spending have raised Canada's debt-to-GDP ratio. This ratio measures public debt as a percentage of GDP, indicating fiscal sustainability. A high debt-to-GDP ratio can limit the government's ability to respond to future shocks. Addressing this requires stimulating growth and prudent fiscal management. Boosting government revenues through growth can help stabilize the ratio. Sustainable spending aligned with long-term goals is essential. The Canada-US tariff war has disrupted trade flows and created uncertainty. This ongoing conflict has led to delays at border checkpoints, where trucks and containers face increased inspections and scrutiny. The ripple effects are felt across various sectors, impacting the timely delivery of goods and services. Tariffs on key exports like steel and aluminum have strained relations and dampened investment. Factories that once thrived on cross-border trade now face reduced orders and increased costs, leading to a slowdown in production and potential layoffs for industrial workers. The trade war has made Canadian goods less competitive in the U.S. market. Products labeled "Made in Canada" are now more expensive for American consumers, resulting in decreased sales and empty docks that once bustled with export activity. Businesses are hesitant to invest, further weighing on growth. The uncertainty surrounding trade policies has led to empty offices and halted expansion plans, as executives remain cautious about the future. The Canadian government has retaliated with tariffs on U.S. goods. This tit-for-tat strategy aims to pressure the U.S. into negotiations, but also risks escalating the conflict, affecting more industries and consumers on both sides of the border. The overall impact has been negative, highlighting the need to diversify trading partners. Small businesses, in particular, have felt the brunt of the economic downturn, with many closing their doors due to reduced demand and higher costs. Reducing reliance on the U.S. market is crucial. Exploring new global trading partners and diversifying export goods can help mitigate the risks associated with such trade disputes and ensure a more stable economic future. A swift resolution to the trade dispute is needed to restore stability. Diplomatic efforts and trade agreements are essential to rebuild trust and ensure the smooth flow of goods and services across borders once again. The Canadian economy faces a challenging road ahead with domestic and global headwinds. Addressing structural issues is crucial for fostering recovery. Investing in education and skills training prepares the workforce for future jobs. Fostering innovation and entrepreneurship creates a dynamic economy. Addressing climate change can create new growth opportunities. The government must invest in infrastructure and support hard-hit sectors. Reducing red tape and streamlining regulations can foster a business-friendly environment. With sound policies, Canada can navigate turbulence and emerge stronger.